Now we'll look at chapter number 13, which is specialized areas. So we'll try to understand this concept of specialized areas. So in this chapter, specialized areas, we are actually going to cover 3 standards from SA 800 series. What standards we are going to cover? 800 series of standards we are going to cover. So if you see here, as a part of our earlier discussion, we have covered standards from different series. Like we have covered a few standards from 200 series, we have covered a few standards from 300 series, we have covered 500 series of the standards, 600 series of the standards, 700 series of the standards we have seen. Now we are going to look at 800 series of the standards. See, as we all know, a series of standards will be talking about different matters. Like SA 200, if you take SA 200 is going to talk about the standards relating to general responsibilities of the auditor. 300 series will talk about planning and performing the audit. 500 series of standards talk about audit evidence. 600 series of standards talking about using the work of others. 700 series of standards are going to talk about audit report. Similarly, 800 series of standards are also going to talk about specified matters. 800 series of the standards is also going to talk about one specialized areas. So that's what we call 800 series as a specialized areas, we call it. 800 series, we call it as what? Specialized areas. In some cases, we tend to perform some special kind of audit assignments. In that special kind of assignments, what procedures we are required to follow, how we are supposed to do that special kind of audit assignments, that guidance has been given under SA 800 series. So the title of the chapter itself says specialized areas. Sometimes a chartered accountant in practice will be called upon to take up some special kind of audit assignments. So if you are such a practicing chartered accountant who have been called upon to do some kind of special audit assignments, then what kind of things you have to follow, what guidance you need, what is expected from you, what you are supposed to do, how your opinion should be, what precautions you have to take. So all that guidance has been given under 800 series. So you are telling audit of specialized areas. What kind of specialized areas? What kind of special audit assignments? So here 800 series will generally talk about 3 special audit assignments. 800 series is going to talk about 3 kinds of special audit assignments. Number 1, conducting. Sometimes you will be called upon to conduct audit of financial statements which are prepared as per special purpose framework. Sometimes as a practicing chartered accountant, you will be called upon to conduct the audit of the financial statements not prepared as per general purpose framework, prepared as per special purpose framework. So sometimes a client will prepare financial statements as per the special purpose framework and you will be called upon to do the audit. In that audit, what kind of precautions you have to take, what procedures you have to perform, how you have to give the audit report, that guidance has been given under SA 800. Similarly, sometimes you will be called upon to do assignment of audit of only single financial statements or an element of the financial statements. Sometimes as a chartered accountant in practice, you will be called upon to conduct audit of single financial statements or specific elements of the financial statements. Like for example, you are a practicing chartered accountant, some client called you and told, some client X Limited came to you and told, sir, we want you to conduct the audit, but we want you to conduct the audit of only balance sheet. So once again, let me repeat. So the client is coming to you and asking, sir, we don't want you to do the audit of complete financial statements. We have our statutory auditor. Our statutory auditor will do the audit of complete set of financial statements. All the entire financial statements will be audited by some other person. We want you to conduct audit of only balance sheet. Or we want you to conduct audit of only P&L. We want you to conduct audit of only cash flow statement. Or we want you to conduct audit of only revenue, which is there in the financial statements of our company. We want you to conduct audit of only trade receivables and the related notes, which is there in the financial statements. So like this, some clients will come to you and ask you to do audit of only single financial statement or a specific element or account of the financial statement. In that cases, how you have to take up such assignments, how your audit report should be, what precautions you have to take, what procedures you have to perform, what guidelines you have to follow. That guidance has been given under SA 805. Where that guidance has been given, that guidance has actually been given under SA 805. SA 805 talks about how to conduct audit of a single financial statement or a component or a element or account of a financial statement. Next, sometimes the clients will prepare something called summary financial statements, abridged financial statements. Have you heard that in the Companies Act? So sometimes one main set of financial statements will be there. Apart from that main set of financial statements, the company will prepare one more summarized version of the financial statements also. So sometimes you will be called upon to conduct audit of that summarized financial statements, to express opinion on that summarized financial statements, not the detailed financial statements. There will be one more version, summarized financial statements will be there. Sometimes as a chartered accountant in practice, you will be called upon to conduct audit of that summarized financial statements and express opinion on that. In that cases, how to do such assignments, what kind of guidance is required, all that guidance has been given under SA 810. So these three are the specialized areas where this 800 series is going to be a helping hand for us. So SA 800 is going to talk about how to conduct audit of the special financial statements prepared as per special purpose framework. SA 805 is going to talk about how to conduct audit of a single financial statement or an account or element of the financial statement. SA 810 is going to talk about how you are going to conduct audit of the summary financial statements. And as I have told, these are specialized areas. These are not regular audits. This will not happen every time. Every client will not get it done. Every company will not undertake this assignment. It all depends on the facts and circumstances, depending on the need of the hour. In some exceptional circumstances, in some rare circumstances, the client might have this kind of requirement, and in that cases, how you can do the audit. Clear? See, these kind of assignments will not regularly happen. Special purpose framework, summarized financial statements, audit of single financial statements, this will not regularly happen. That's why we call them as specialized areas. In some special circumstances, depending on the need of the hour, the client might require these kind of assignments. This will not happen every time. So whenever the client, under rare circumstances, these kind of assignment a client is expecting from you, you should be ready to do it, but you have to pay some special attention to some special matters. So that is what the guidance which has been provided under this chapter. Very easy chapter, very simple chapter, we can complete in no time. So 3 standards if we cover, the chapter will come to an end. So that's what I have told. After the audit of NBFCs, whatever remaining chapters are there, very small chapters, very easy chapters, just like that we can wind it up in just 1 day, 2 hours, 3 hours, like that we can wind it up the every chapter. So having said that, now let me start my discussion with SA 800. The first standard in the 800 series which we will pick up for discussion will be 800 series. Then what does 800 series talk about? 800 series talk about SA 800 deals with special considerations, audit of financial statements prepared in accordance with special purpose framework. So in case if you are called upon to conduct the audit as per the special purpose framework, how you are going to do the audit. So let me create a separate sheet for this. Separate note I will create. So SA 800, which is going to talk about how to conduct audit of financial statements which are prepared as per special purpose framework. Guys, does this term special purpose framework sound familiar? Have you come across this term special purpose framework anywhere else? Yes, I think the things should start making sense now. You should at least get that feeling that, okay, this term I have read it somewhere. We have come across this term somewhere. At least you should get that familiarity vibe. Okay, if you are not getting it, you are missing on something. You are not listening to the classes properly. So this term, special purpose framework, did we come across that earlier? Yes, we came across that earlier. Where did we come across this term, special purpose framework? If you remember the first chapter with which we have started the discussion altogether, Introduction to Audit. This chapter we had a discussion. Yes or no? We started our discussion with this chapter only, Introduction to the Audit. In that introduction to the audit, we spoke about the concept of applicable financial reporting framework. So what do you mean by applicable? What do you mean by financial reporting framework? Financial reporting framework means nothing but a set of rules and regulations which are required to be followed in the process of preparation and presentation of the financial statements. That set of rules and regulations, we are going to call it as applicable financial reporting framework. Like Schedule 3 and accounting standards, that is the applicable financial reporting framework for a company. Banking Regulation Act, that is an applicable financial reporting framework for a bank. IRDA is an applicable financial reporting framework for insurance companies. So like that, the laws and regulations which are expected to be complied, the rules and regulations which are expected to be followed in the preparation and presentation of the financial statements, that we are going to call it as applicable financial reporting framework. And the frameworks are divided into multiple categories on the basis of purpose. On the basis of purpose, the frameworks are broadly divided into 2 categories. One is general purpose framework. I'm just revising here, guys. I'm not explaining this concept for the first time. So purpose, on the basis of purpose, frameworks can be divided into two categories. One is general purpose framework and the other one is special purpose framework. Sir, what is general purpose framework? General purpose framework refers to such a framework which fulfills financial information needs of various users of the financial statements. The framework which fulfills the financial needs of various users of the financial statements simultaneously, that framework we are going to call it as general purpose framework. Like for example, if you look at Schedule 3 and accounting standards, if you prepare the financial statements as per this Schedule 3 and accounting standards, it will fulfill the requirements of multiple users simultaneously. If you go and give that financial statements to the shareholders, they will use it for their decision making. If you go and give it to the government requirements also will get fulfilled. If you go and give it to the employees, their requirement also will get fulfilled. If you go and give it to the research analysts, their requirement also will get fulfilled. So if you are following a set of rules and regulations which will fulfill information needs of so many users simultaneously, so that framework we call it as general purpose framework, like Schedule 3 and accounting standards. See, till now, whatever standards on audit we have discussed, they are all talking from the perspective of audit of financial statements which are prepared as per general purpose framework. Like we have seen SA 200, SA 210, SA 500 series, how to obtain audit evidence, SA 700 audit reporting requirements. So whatever standards we have discussed, those standards are all talking from the perspective of how to conduct audit of the general purpose financial statements. Those financial statements which are prepared as per the general purpose framework, which are prepared for fulfilling the information needs of various users of the financial statements, various users which are fulfilling the information needs of various users simultaneously. So till now, whatever standards we have discussed, those all standards are going to talk about audit of audit of general purpose financial statements. Till now, whatever content we have discussed, all those standards are related to general purpose financial statements audit. Now there is one more framework. What is that framework? Is special purpose framework. Special purpose framework refers to such a framework which will fulfill financial information needs of specific users. If you are trying to prepare the financial statements, if you are following certain set of rules and regulations which are going to fulfill financial information needs of only one or two specific users, you are following some rules, you are preparing the financial statements, but those financial statements will not be accepted by everybody. Those financial statements are exclusively prepared for the information needs of the specific user, for certain user, for specific users of the financial statements. To meet the information needs of just one or two users, we are following certain rules and regulations that we are going to call it as special purpose financial statements. Which are prepared as per special purpose framework. So sometimes as an auditor, you are called upon to conduct the audit of this kind of special purpose financial statements. So the entity will prepare financial statements not following Schedule 3 and accounting standards. They will follow certain set of rules and regulations as per the requirements of one or two specific users. And in case if you are called upon to conduct audit of that special purpose financial statements, how you are going to do it? I will give you a few examples. Sir, what could be the examples of special purpose framework? Can you tell us? Let me tell you. See, sometimes what will happen is, take for example, creditors or bankers. Sometimes creditors or bankers will have one specific requirement. Take for example, there is a company, Reliance Industries Limited. It went to SBI asking for a loan. Bank told, boss, you are expecting a loan from us. Okay, we will give it to you. But if you prepare the financial statements on cash basis, so as they know that Reliance will prepare general purpose financial statements, they follow Schedule 3 and accounting standards. And as we know, general purpose financial statements will be prepared on accrual basis. But what SBI is telling is, okay, you have prepared the financial statements till now as per Schedule 3 accounting standards. But if you expect us to give the loan, if you want us to give you the loan, we will do one thing. If you expect a loan from us, you do one thing. You prepare the financial statements on cash basis. And bring that financial statements to us. On that basis of the financial statements on cash basis, we will give you loan. This who told? Creditors has told. So this is one example of special purpose framework. So now this Reliance Industries Limited will go back, prepare their financial statements on cash basis, not on accrual basis. And those financial statements will be fulfilling information needs of only one specific user. In our example, he is a banker or creditor. So exclusively to fulfill the requirements of the banker, we have prepared the financial statements on cash basis. So Reliance Industries Limited prepared the financial statements on cash basis only to fulfill the requirements of the banker. Sir, why the banker will ask for cash basis of financial statements? Might be the bankers want to determine actual cash profit, actual repaying capability they want to determine. So that's why the bankers will generally ask the companies to prepare the financial statements on cash basis. So I followed a framework here, I followed a rules and regulation here, but that financial statements will fulfill financial information needs of only one specific user here, in our example, banker. So this is one example of special purpose framework. Now in this case, you might be called upon to conduct the audit of that financial statements which are prepared on the cash basis. The bank might say, boss, you prepare the financial statements on cash basis and also you get that financial statements on cash basis audited. What did the management of the bank say? You do one thing. If you expect us to give the loan, you prepare the financial statements on cash basis, go to a chartered accountant, get those financial statements on cash basis audited. If you bring that audited financial statements on cash basis, then only we'll give you the loan. So now you tell me, a client has approached, Reliance has approached you asking you to do the audit of financial statements which are prepared on cash basis. That means this is the case where you are conducting audit as per the special purpose framework. Now what special considerations you have to follow? Now what special considerations you are required to follow? So this is what this standard is going to talk about. So one such case, one example where special purpose framework will become applicable is as per the requirements of the bankers when they are asking you to prepare the financial statements on cash basis. One more example I will tell you. Sometimes legal or regulatory requirements. Sometimes some legal or regulator, some regulatory authority will ask you to prepare the financial statements on some specific rules and regulations. Apart from Schedule 3 accounting standards, apart from generally accepted framework, sometimes some legal authority, some regulatory authority might ask you to follow some specific rules and regulations in the preparation of the financial statements. That could also be an example of special purpose framework. Might be, if I have to give you an example here. So take for example, you are conducting audit of some cooperative society. In case of cooperative society, the Cooperative Societies Act has told they have to prepare financial statements as per special rules and regulations which will fulfill the information needs of only the registrar of the cooperative society. So here regulator is asking you to follow certain set of rules and regulations. Might be now the cooperative society will approach you, sir, our Cooperative Societies Act, our regulator, the registrar of cooperative society has asked us to follow these special rules in the preparation of the financial statements. You please do the audit. This is also one example where we are conducting audit of the financial statements prepared as per special purpose framework. Or I will give you vague example. This might not be reality. Just I will give you one example to make you understand. Take for example, tomorrow RBI is coming and telling, we will give you one special rules and regulations. You follow some special rules and regulations and prepare the financial statements. On that basis, we will assess your CRR, SLR positions. So now RBI has given me specific rules which are apart from Schedule 3 accounting standards or Banking Regulation Act. So bank has prepared one set of financial statements. Okay, let me give you example this way. Take for example, Punjab National Bank is there. Now it has been asked by RBI. RBI told the Punjab National Bank, boss, your financial position is already bad. You have given loans to Nirav Modi and all. You have already burnt a lot of money. We want to assess your position. We want to assess how far you are comfortable, how far you are sustainable. So we want to know. So what RBI told is, what this regulator told is, they gave some set of rules and regulations. You don't follow Banking Regulation Act. We will give you some rules and regulations. According to that rules and regulations, prepare your financial statements. What RBI told? You generally prepare one, you will have general purpose financial statements. PNB will prepare general purpose financial statements as per Banking Regulation Act. They will prepare financial statements as per Banking Regulation Act. RBI is telling, okay, you prepare it. You prepare the general purpose financial statements, you get them audited, you circulate it, you do it. In addition to that, for our specific purposes, you are preparing general purpose financial statements, agreed, you do it. But for we have one specific purpose. For that specific purpose, we will give you certain rules and regulations which are not as per general purpose, which are not as per Banking Regulation Act, which are not as per Schedule 3 and accounting standards. We will tell you specific rules. You prepare the financial statements as per that special purpose framework, as per specific rules and regulations. You prepare the financial statements that we will use it to determine your financial viability. So in this case also, RBI might ask, okay, you do one thing, you prepare the financial statements as per specific rules and regulations given by us. Not just preparing the financial statements, you go to a practicing chartered accountant, you get them audited. So now PNB is approaching. Sir, our regulator RBI has asked us to prepare the financial statements as per special rules. We have prepared it. They are asking us to get it audited, sir. Please do the audit of our financial statements, which we have prepared as per the requirements of RBI. This is also the case where you are conducting audit of the financial statements as per special purpose framework. What precautions you are required to take, what guidance you have to follow. SA 800 will guide you. Or sometimes you might be required to you might be required to follow special purpose framework on the basis of a contract. Okay, I will tell you one more thing. So for example of contract, I will give you. So how under contract you might be required to prepare special purpose financial statements. Take for example, there is a company, right? So let me put it this way: Blinkit, a startup is there. Okay, this Blinkit is going to be acquired by Zomato. Zomato is going to acquire Blinkit. Now, for the purpose of this acquisition, for the purpose of this amalgamation or acquisition, whatever you say it, purchase consideration needs to be determined. Purchase consideration is to be determined. Obviously, when one company wants to acquire another company, purchase consideration is mandatory. So this is the buying company, this is the selling company. Now, how this purchase consideration will be decided? Purchase consideration will be decided on the basis of net asset value, and that net asset value will be derived from the financial statements. So now Zomato told, okay boss, we will buy you, we will pay you purchase consideration. That purchase consideration will be on the basis of financial statements, but not as per your general purpose financial statements. Not as per the financial statements which you have prepared as per general purpose framework, not as per the financial statements as per Schedule 3 and accounting standards. Okay, we will determine your net asset value on the basis of financial statements, but not the financial statements which you have prepared on the basis of Schedule 3 and accounting standards. We want you to prepare as per some specific rules. We want you to prepare financial statements by following certain rules and regulations which we will say. Like for example, if you have any debtors, for every debtor you have to create 50% of the provision. Generally, Schedule 3 and accounting standard will not say create a provision for every debtor. But this Zomato is telling, if you want to buy, we want to determine purchase consideration on the basis of financial statements. But in that financial statements, you follow specific rules. You prepare financial statements in such a way that for every debtor, create 50% of the provision. For every debtor, you create a 50% of the provision. For certain assets, you have to write it off completely. Certain assets like intangible assets, you write it off completely. And also, certain incomes you recognize only on cash basis. Certain incomes you recognize only on cash basis. What incomes you have to recognize on cash basis, I will tell you. Certain expenses, you create extra provisions. For certain expenses, you add extra provisions. So like this, what Zomato has told to this Blinkit is, you prepare financial statements as per the rules and regulations which we will tell you. This is all as per that acquisition contract. In the acquisition contract, they have clearly written purchase consideration will be determined on the basis of the financial statements prepared as per specific rules and regulations. In that contract, they have written. So in the contract, all these rules for the preparation of the financial statements has been given, which are apart from Schedule 3 and accounting standards. Now, what Zomato has done is, boss, you prepare the financial statements as per the specific rules and regulations. Not just that, you go to a practicing chartered accountant, get them audited. Get an audit report from them that you have prepared the financial statements exactly as per our rules and regulations. You did not violate. Go to the chartered accountant, get them audited. Now, this Blinkit has come to you, brought their financial statements which they have prepared as per the rules and regulations as specified in the contract, and they told me, sir, please do the audit of this special purpose financial statements. So this is also one such example of conducting audit of special purpose framework related financial statements. Now, how you are going to do this audit, how you are going to conduct audit, what precautions you are required to take, what you are required to do. So that is what the guidance which has been given under SA 800. Okay guys, able to understand? So these are the circumstances where generally special purpose frameworks will come into picture. So that special purpose framework might arise because of the requirements of the creditor or banker. That special purpose framework might be required by the regulator. That special purpose framework might be required under a contract. So if you could pay attention here, whatever examples I have given, those are not something which will happen regularly. These are exceptional circumstances. These are some rare circumstances where the companies might be required to prepare financial statements as per special rules and regulations, and they will approach you as a practicing chartered accountant to conduct the audit of them. So then what you should do, this is what covered under SA 800. Everybody able to understand the concept till here? Just give me a quick yes that you are able to understand the concept What does this SA 800 talk about? Everybody clear about it? Just give me one quick response. Okay, so thank you for the responses. Now let us proceed further now. Right, so this is what the entire standard is going to talk about. So if you come to the standard here, see, before I proceed further, I want to remind you one more thing. If you remember, this is what the division of the frameworks on the basis of purpose. On the basis of the purpose, frameworks are divided into general purpose framework, special purpose framework. General purpose framework refers to such a framework which fulfills financial information needs of various users, whereas special purpose framework refers to those frameworks which fulfills financial information needs of specific users. One more thing I want to remind you, as we all know, the frameworks are once again divided into two categories. On the basis of presentation, frameworks are once again divided into two categories. What are they? Do you remember? This is also something we have understood as a part of our introduction chapter. On the basis of presentation, how the frameworks are divided. So on the basis of presentation, frameworks are once again divided into two categories. One is fair presentation framework and the other one is compliance framework. One is what? Fair presentation framework and the other one is compliance framework. So what do you mean by fair presentation framework? It refers to such a framework where financial statements are prepared according to the requirements of such framework. But here you can either deviate from the requirements of the framework or you can provide additional disclosures beyond the requirements of the framework in order to achieve fair presentation. So to achieve the fair presentation, you can either deviate from the requirements of the framework or you can provide additional disclosures. So that we call it as fair presentation framework. That means the name itself says fair presentation. Financial statements giving true and fair view is a top priority in the case of fair presentation framework. Whereas when it comes to compliance framework, this also we know that compliance framework refers to such a framework in which the financial statements are prepared strictly as per the requirements of the framework without any deviation. So here deviation will not be permitted. Whatever has been told in the requirement, that you have to strictly follow. As the name itself says, compliance is a top priority. Strict compliance with whatever has been given, that is a top priority. Not deviation is not permitted. But in the case of fair presentation framework, true and fair is a top priority. Here you are given permission to deviate from the requirements, or even you are given the permission to provide additional disclosures in order to achieve fair view. But in case of compliance framework, you have to strictly follow whatever has been told in the framework. You are not permitted to deviate at any cost. Clear? So, and I have told you one more point in the introduction. Most of the special purpose financial statements follow compliance framework. Most of the special purpose financial statements are going to follow what? Compliance framework. So all this discussion we had much earlier in our first session itself. Just I have reminded. So just I wanted to remind this one more kind of presentations also, one more kind of frameworks on the basis of presentation. But we are not going to talk about this. Mainly we are going to talk about this special purpose framework only. How we are going to conduct audit of the special purpose financial statements. So let us have a look at the standard now once. So first they are defining what is a special purpose framework. So SA 800 defines special purpose framework as a financial reporting framework which is designed to meet financial information needs of specific users. Framework means set of rules and regulations. If a set of rules and regulations are devised in such a way that they are going to fulfill financial information needs of specific users, not all the users, they are only going to meet the financial information needs of specific users, that we call it as special purpose framework. Now, the financial reporting framework will be further divided into fair presentation framework or a compliance framework. Just now, as I've told, there is one more categorization of the frameworks on the basis of presentation. It could be fair presentation framework or it could be compliance framework. The requirements of applicable financial reporting framework determine the form and content of the financial statements and what constitutes a complete set of financial statements. So first thing is, what should be your format of the financial statements? What should be the content of the financial statements? All that will be decided on the basis of what is your applicable financial reporting framework. So first you have to determine what will be the applicable financial reporting framework. Are you required to follow Schedule 3 and accounting standards? Are you required to follow special framework? Are you permitted to deviate? Are you not permitted to deviate? So consider all these factors and the management has to decide what will be their applicable financial reporting framework. That means what set of rules and regulations they have to follow in the preparation of the financial statements. First, they have to decide that. So once they decide what will be their applicable financial reporting framework, on that basis only, what should be the format, what should be the content in the financial statements, everything will be decided on the basis of applicable financial reporting framework. So that's why SA 210 also says one thing, the one of the preconditions for an audit, one of the important condition to start the audit is acceptability of applicable financial reporting framework. So one of the top responsibilities of the management, one of the first and foremost responsibility of the management is the management has to determine which will be that what is their applicable financial reporting framework. And as an auditor, you have to evaluate whatever applicable financial reporting framework which management has adopted, is it acceptable or not. So what is management's primary responsibility? Determining what is the applicable financial reporting framework for them. So as an auditor, what is your responsibility? Whether applicable financial reporting framework decided by the management, is it acceptable or not? If you find that whatever applicable financial reporting which management has decided that is not acceptable, you should not accept that audit only. If you came to know management is choosing wrong applicable financial reporting framework, that is what the meaning of that sentence. What do you mean by applicable financial reporting framework not being acceptable? So as an auditor, if you find that applicable financial reporting framework which is accepted, which is used by the management is not acceptable, they are using wrong applicable financial reporting framework, then you should say you should not accept such audit assignment only. So that's why first and foremost responsibility, management should determine applicable financial reporting framework. On that basis only, format, presentation, content, everything, every information, the financial statements, it depends on applicable financial reporting framework. Next, they are giving examples of the special purpose framework. The same examples I have also given. The cash receipts and disbursement basis of accounting, nothing but cash basis of accounting for cash flow information that an entity may be required to prepare for creditors. So sometimes a special purpose framework might be as per the requirements of the creditor. They might ask us to prepare the financial statements on cash basis. Or the financial reporting provisions established by a regulator to meet the requirements of that regulator. Sometimes the requirements from the special purpose framework can also come as per the regulator's requirements. Or the financial reporting provisions of a contract. Sometimes the special purpose framework requirements might also arise from a contract, such as bond indenture. Indenture means agreement, such as a bond agreement, loan agreement, or a project grant or acquisition. So sometimes because of a contract also special purpose framework requirements will arise. The same three things I have told you, the same three examples of the special purpose framework, that might be as per the requirements of the creditors, that might be as per the legal or regulatory requirements, or that could be because of contract. Okay, now, so let us come to what guidance does the standard give. So when you are accepting such assignment, for example, a client came to you. So take the first case only. The client prepared the financial statements on cash basis. So Reliance Industries Limited, they need a loan from SBI. Banker asked to prepare the financial statements on the cash basis. So Reliance Industries Limited prepared the financial statements on cash basis, and they approached you. You are a practicing chartered accountant. You are that bakra there. So you are a practicing chartered accountant. The auditor approached you. The management approached you. They prepared the financial statements as per special purpose framework, and they approached the chartered accountant to conduct the audit of the special purpose financial statements. Now, whether you should accept this engagement or not, that depends on what factors. What factors you will keep in mind, what considerations you will keep in mind in undertaking that audit as per special purpose framework. Able to understand what I'm trying to say? A client has approached you and he has requested you, sir, please prepare the please audit the financial statements which we have prepared as per special purpose framework. Our banker wants to prepare us the financial statements on cash basis. Sir, these are the financial statements which we prepared on the cash basis. You please do the audit. Now you have to decide whether you should accept that audit assignment or not. So what considerations, what factors you have to keep in mind for accepting that audit? So they say here, first thing what you need to consider, as I've already told you, the main important factor which you should consider in accepting such engagement is whatever framework, whatever special purpose framework they are following, is it acceptable? Is it acceptable that you need? Is it okay? Is the management okay in preparing that financial statements as per that cash basis? So first factor which you have to determine in accepting that engagement as per special purpose framework is you need to determine whether that applicable financial reporting framework is acceptable. Okay, so that is the first step. In the case of special purpose financial statements, the financial information needs of the intended users are a key factor in determining acceptability of the financial reporting framework applied in the preparation of financial statements. So when a client is approaching you, asking you to do the audit as per special purpose framework, first you need to determine whether that framework, whatever they are following, is that appropriate, is that acceptable. Are they fulfilling the needs of intended users? Are they fulfilling the needs of that specific users or not? You have to consider, and you have to first determine that applicable financial reporting framework is acceptable or not. So from where the rules and regulations will be derived generally. For example, if any company, listen carefully guys, this standard is, now the content will look a little bit out of the box, but I will try to simplify as much as I can. Don't go into the details. Whatever I'm explaining, please pay attention. So some company has approached you. They prepare the financial statements as per special purpose framework. They approach a practicing chartered accountant to do this audit assignment. As I have told, the first factor which you need to decide is whether this special purpose framework is acceptable or not. But first of all, from where the special purpose framework can come from? They have followed, see, special purpose framework means what? They have followed some specific rules and regulations. They have followed some special rules and regulations in preparation of the financial statements. Now, as a practicing chartered accountant, first you need to determine from where this special rules and regulations came from. From where this special rules and regulations came from, first you need to understand it. So there could be three reasons. There could be three sources from where that special rules and regulations may come from. That special rules and regulations may come from financial reporting standards which are given by an organization like ICAI. Those special rules and regulations may be derived from some financial reporting standards which are given by some organization like ICAI, not exactly ICAI, like any organization might have given that requirements. Or that special purpose framework might have come from some financial reporting standards which are given under some law or regulation. Or that special rules and regulations might have come from any contract. That special rules and regulations might have come from any contract. So if a client is approaching you and asking you to conduct the audit of the financial statements as per the special purpose framework means nothing but special rules and regulations which are required to be followed in the preparation of the financial statements. As an auditor, first you need to identify the source from where these rules and regulations are taken from. Are these rules and regulations are coming from some financial reporting standards given by some organization, some entity, some organization, some accounting body, some regulating body? Are they giving that special rules and regulations? Or are those rules and regulations are given by some law or regulation? Or those special rules and regulations are contained in a contract? First you have to identify it. So the same thing they say here. If you come back to the standard here, so first we need to determine whether the financial reporting framework is acceptable or not. And as I have told, that special purpose framework might come from financial reporting standards established by an organization. Some organization like ICAI might have given that financial reporting standards. Or that special purpose framework might have come from financial reporting framework prescribed by some law or regulation, or some law or regulation might have given you that special rules and regulations. Or that financial reporting framework might have been coming under a contract, not contract guys, contract. So that special purpose rules and regulations might have come under contract. So let us try to understand. They're trying to say something. The applicable financial reporting framework may encompass the financial reporting standards established by an organization that is authorized or recognized to promote standards for special purpose financial statements. Sometimes some organizations will promote the standards relating to special purpose financial statements. In that case, those standards will be presumed acceptable. If the standards, see, if the client has approached you asking you to prepare special purpose asking you to conduct audit of special purpose framework financial statements, and those special rules and regulations are given by some organization, are they acceptable or not? Yes. If the rules and regulations are given by some organization for the preparation of special purpose financial statements, generally we assume that rules and regulations as being acceptable. We need not question it. The same thing they say. In that case, those standards will be presumed acceptable for that purpose if the organization follows an established and transparent process in consideration of the relevant stakeholders. If you came to know whichever organization has given that rules and regulations for the preparation of special purpose financial statements, they have considered all the requirements of the intended users and they have given that standards, obviously you can assume it as acceptable. No need to question it. You can start accepting that audit. Clear? So this is all not at all any concept guys. This is just some vague discussion. Just please follow whatever I'm trying to say here, right? So first case, as I have told, the special purpose framework might arise from financial reporting standards given by any organization. In that case, generally we assume it to be acceptable. No need to question it. Or as I've told, sometimes the special purpose framework might also arise from laws and regulations. Let us see what they're trying to say about it. Some laws or regulations may prescribe the financial reporting framework to be used by the management in the preparation of special purpose financial statements. Sometimes law or regulation tell you what rules and regulations you are required to follow in the special purpose financial statements. For example, a regulator may establish financial reporting provisions to meet the requirements of that regulator. In the absence of indications to the contrary, such a financial reporting framework is also presumed to be acceptable. In case if law or regulation have gave you that rules and regulations, then also it is deemed to be acceptable. See, sometimes what will happen is there will be conflict between the financial reporting standards given by some organization and the financial reporting standards given by law or regulation. Sometimes there will be conflict between the two. In that case, what will happen? That conflict needs to be resolved. In that case, what should happen? That conflict needs to be resolved. Sir, how that conflict will be resolved? You need not worry about it. That is not a part of our examination. That is not a part of our syllabus. You need not worry about it. Just you have to remember one line. If there is any conflict arising in financial reporting standards given by some organization or financial reporting standards contained in the law and regulation, that conflict needs to be resolved. Just this much you remember. How to resolve it, you need not worry about it. So the same thing they say that where the financial reporting standards referred to above are supplemented by legislative or regulatory requirements. That means some organization is also giving financial reporting standards, some law or regulation is also telling some rules and regulations for special purpose financial statements. SA 210 requires the auditor to determine whether any conflict exists between the two, and if yes, prescribe actions to be taken if such conflict exists. That means that conflict should be resolved. In order to resolve that conflict, you have to take some actions. So what actions you are required to take, that you need not worry about it. Clear? Third, from where the special purpose framework can come from. As I've told, it might even come from contract also. I gave you example for contract also, that Zomato Blinkit example. In the contract of acquisition, they have given what rules and regulations they are required to follow. So sometimes these rules and regulations, that special purpose framework might even arise from contract. So that's what they say here. The applicable financial reporting framework may encompass financial reporting provisions of a contract or sources other than those prescribed in the above paragraphs. Apart from organization, apart from law or regulation, sometimes the special purpose framework might come from other cases also, other sources also, like contract. In that case, the acceptability of the financial reporting framework in the circumstances of the engagement is considered by determining whether a framework exhibits attributes means characteristics normally exhibited by acceptable applicable financial reporting framework. In that case, you have to see, in case if the rules and regulations are given under a contract, then you need to check whether in that contract whatever rules and regulations are given, those are having similar characteristics as are expected in the applicable financial reporting framework. So simply they are trying to say that in case if in the contract or if the rules and regulations, if the special purpose framework is derived from any contract, you need to check whether it is having good attributes, whether it is having characteristics as we generally expect in a normal applicable financial reporting framework. That means they should have some similar kind of characteristics. When we expect, okay, so let me put it this way. Sir, generally we expect some characteristics to be there in the applicable financial reporting framework. If those characteristics are also there in the financial reporting framework which is given in the contract, then we can deem it as acceptable. Okay, the same thing they say here. Once again, I am reading it for the sake of your convenience. In that case, the acceptability of financial reporting framework, when the financial reporting framework has been given in the contract, whether it is acceptable or not, it depends on by determining whether the framework exhibits similar characteristics which are normally exhibited by a applicable financial reporting framework. In case of special purpose framework, the relative importance to particular engagement of each of the attributes normally exhibited by applicable financial reporting is a matter of professional judgment. Now you'll get a doubt. So you are telling, in case if the rules and regulations are given under a contract, we will deem it as acceptable if it is containing similar attributes which we expect in the applicable financial reporting framework. Now you will get a doubt. Sir, what are those attributes which we generally expect in applicable financial reporting framework? Now they are telling there is no hard and fast rule there. That depends on the professional judgment. So guys, are you able to understand the connectivity here? So they are telling three cases. Your financial reporting framework in the case of special purpose financial statements might come from three sources. Number one, first source is it might be given by some organization. Then they will be generally assumed to be acceptable. Sometimes it will be given under law or regulation. Then also we deem it as acceptable. Sometimes it will be given in other sources like contract. Then we need to check under that contract whatever rules or regulations are given, are they having similar attributes which we generally expect in an applicable financial reporting framework. Sir, which attributes we generally expect in applicable financial reporting framework? That depends on the professional judgment. I know all this discussion is vague, but I think I'm able to summarize it. Okay, so let me write it here. Summaries I will write. for your better understanding. So this also you can copy or take the screenshot along with me. So that special purpose framework might come from organization, by some organization, or that might come from some law or regulation, or that might also come from contract or other sources. So if it is given by organization, it is acceptable. Generally, it is acceptable. No need to question it. If it is given under some law or regulation, then also it is acceptable. No need to question it. Then what else? What one extra point I have told? If there is any conflict, between the two, resolve it. If it is given under any other contract, then you have to check for attributes. Check for attributes, which will be present in applicable financial reporting framework. And what are the attributes? Which attributes we generally expect? That attributes completely depends on professional judgment. Just write it here. Just copy this. This is the summary of that entire paragraph. Just note it down. Or else, even if you want to take a screenshot also, you can take it. No issue. Done? Right. So take a screenshot quickly. I'm moving now. Let us come back here. Okay. So these are the considerations which you have to keep in mind while accepting such engagement. Okay, sir, all these factors I have considered. I have accepted the audit. Now I have to plan and perform the audit. No. So when you are planning and performing the audit, what special things you have to keep in mind? So the previous paragraph talks about what things you have to keep in mind, what considerations you have to bear in mind while accepting such an engagement. So you have considered all these factors, you have accepted that assignment for special purpose financial statements. Now you have to start doing the audit. No, you have to start planning for the audit. You have to start performing the audit. So what considerations you have to keep in mind while planning and performing the audit? So I will try to summarize here what special considerations you have to keep in mind. So when planning and performing the audit, so let me write the summary also here. First I will write the summary. Considerations while planning and performing the audit. So here they will specifically talk about 4 standards. When you are planning and performing the audit, they specifically pay attention to 4 standards. What are they? Number 1, SA 200, then SA 320, then SA 260, then SA 700. Regarding 4 standards they will talk about. I will try to summarize it, then we will read it from the material. So very easy discussion only, have complete focus now. So when you are planning and performing audit of special purpose financial statements, they're specifically talking about the considerations, the things which you have to keep in mind while planning and performing audit of special purpose financial statements, and they talk about specifically 4 standards. So when you are conducting audit of special purpose financial statements, you need to comply with SA 200 also. Sir, what SA 200 talks about? What requirements of the SA 200 have to comply? Number 1, you have to comply with all the ethical requirements, including independence. When you are conducting audit of special purpose financial statements, you are also required to comply with all the 5 ethical requirements, including independence. What are the 5 ethical requirements? Fundamental principles, which we have discussed in the professional ethics. What are they? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. So like the way you follow with these fundamental principles when you are ethical requirements, when you are conducting audit of a general purpose financial statements, even you are required to comply with all these ethical requirements even while conducting audit of special purpose financial statements also. So this is the first thing, you are required to comply with all ethical requirements even in the audit of special purpose financial statements also. Sir, what does they say? SA 200 also says while conducting audit of the special purpose financial statements, you need to comply with all relevant essays. You need to comply with all relevant essays. So like the way when we do the audit of the general purpose financial statements, we try to do the audit after complying with all relevant standards, right? Similarly, when you are conducting audit of special purpose financial statements also, there also you try to make sure that you are doing the audit of the special purpose financial statements as per relevant standards on audit. If a relevant standard on audit is becoming applicable for you, you have to comply with that standard. Sometimes some standards itself will become applicable. For example, you are conducting audit and your client is not having any related party. If there are no related parties, SA 550 is not having any role to play. So unless the standard becomes irrelevant, if the standard itself has no role to play, why? Because the conditions given in the standard are not present. For example, SA 550 will become applicable only when you have related party. Yes or no? So in that case only SA 550 will come into picture. Like similarly, SA 560 will come into picture only when you have subsequent events. So like that, in case if certain standard is not becoming applicable, you need not worry about it. But if a standard becomes applicable in the given case, you have to comply with all relevant standards on audit. If certain standard is not relevant for you for that audit because conditions applicable for that standard are not present, like SA 550 related parties are not there, you can ignore that SA 550, you have to comply with other standards. The same thing they are trying to say it here also. Understood? So you have to comply with ethical requirements, you have to comply with all relevant standards on audit. Sometimes in exceptional circumstances, you might ignore the requirements of the standard on audit and you can perform alternative audit procedures. You can perform alternative audit procedures. So sometimes you will not be able to meet the requirements in the standard. Then you are permitted to follow some other approach apart from whatever has been told in the standard. You can follow from alternative approach to achieve your objectives. But in that case, in case if you are unable to perform a procedure given in the standard for special purpose framework, then what you can do, then you can follow some alternative requirement, but give that disclosure in your audit report. In case if you are unable to perform an audit procedure given in certain standard, then you have to perform alternative audit procedure. Okay, you will be given that freedom. Why? Because in special purpose framework, sometimes exactly whatever has been told in the framework, we might not be able to apply. In those cases, you can deviate, you can perform something else apart from the standards, but give a proper disclosure in the audit report. So what you are unable to perform. Clear? So this is what basically they say here. You need to comply with ethical requirements. You have to comply with all relevant standards. In some exceptional circumstances, you might feel that requirements of the SA you are unable to perform. Then you can perform alternative procedures, but give a proper disclosure. Then SA 320, they say you have to determine materiality. Even in the audit of special purpose financial statements also, you have to determine materiality. And when it comes to materiality, generally, when we are deciding materiality in normal general purpose financial statements, we determine materiality considering information needs of all the users. For example, if I'm conducting audit of the financial statements of Reliance Industries Limited, general purpose financial statements, what is material, what is not material, I will decide it considering the information needs of all users simultaneously. But in the case of special purpose financial statements, while deciding materiality, I have to consider information needs of only intended users. I have to determine materiality considering only information needs of intended users only, not all the users. For example, if I am conducting audit of the cash basis of financial statements, here the intended user will be banker. So I have to consider the information needs of the banker and determine for the banker what is material, what is not material. If I'm conducting financial statements, because if I'm conducting audit of the financial statements which are prepared for the purpose of purchase acquisition, for the purpose of determining purchase consideration, there the intended user will be buyer of my company. I will consider from his perspective what is material, what is not material. On the other hand, if I am conducting audit of the general purpose financial statements, I will keep all my users in mind and I will determine what is material, what is not material. But in the case of special purpose financial statements, I will determine materiality keeping in mind intended users only, not all the users. So this is one thing regarding materiality. Next, SA 260 talks about communication with those charged with governance. In SA 260, they will tell certain matters which are required to be communicated with those charged with governance of the client. So first, in the case of special purpose financial statements, you need to determine who are those charged with governance. You need to determine who are the people falling under those charged with governance. And once you determine the people who are falling under those charged with governance, you have to communicate with them as per the requirements of the standard. Communication as per this SA. So SA 260 says you are required to communicate certain matters with those charged with governance. In case if you are conducting audit of special purpose financial statements, then also you are required to communicate with those charged with governance. But first you have to determine, in the case of from the perspective of special purpose financial statements, who are those charged with governance, and once you have identified those parties, fulfill all your communication requirements. Then finally, whatever your opinion is there, after you have completed the audit of the special purpose financial statements, whatever opinion you want to express, you have to express that opinion in the form of an audit report, and you have to prepare that audit report as per SA 700 requirements. We have read in the audit reporting chapter. So how the audit report should be, what the contents should look like, what should be the wording of your paragraphs. So all that reporting requirements as per SA 700 also you are required to comply. So this is what the specific things you have to keep in mind while planning and performing audit of the special purpose financial statements. So they gave 4 standards. They specifically talk about 4 standards. SA 200, which says you have to comply with all ethical requirements, all relevant essays. Sometimes if you are unable to perform the procedure given in the essay, you can perform alternative audit procedure. SA 320, you have to determine materiality, but while determining materiality, you have to consider information needs of only intended users, not all the users. SA 260, you have to determine who are the people falling under that those charged with governance for the purpose of special purpose financial statements, and you have to communicate with them. SA 700 also will become applicable. Finally, you have to form an opinion on that special purpose financial statements and express that opinion in the form of a written report after complying with all the conditions. Understood? Clear and comfortable, everybody? So the same thing they are trying to say here. Let us try to have a look at it. What they are trying to say. Right. So if you come here, SA 200 requires the auditor to comply with relevant ethical requirements, including those pertaining to independence, relating to financial statement audit engagements, and all essays relevant to the audit. So as an auditor, you have to comply with ethical requirements, and all relevant standards also you have to comply. It also requires the auditor to comply with each requirement of essay, unless in the circumstances of the audit, the entire essay is not relevant, or the requirement is not relevant because it is conditional and the condition does not exist. If essay is relevant, then you have to comply. Sometimes essay will not become relevant. Why? Because some conditions are not there. Related party is not there. SA 550 will not become applicable. You can ignore it. So if the standard is not relevant, ignore. But if the standard is relevant, comply with that standard. In exceptional circumstances, the auditor may judge it necessary to depart from relevant requirements. Sometimes you might be required to depart. Sometimes you will not be able to fulfill the requirements of the standard. Then you are permitted to depart by performing alternative audit procedures to achieve the aim of that objective. But in case if you are departing from the requirement of the standard, as I have told you, you are required to give one proper disclosure. Next one. Application of some of the requirements of the essays in the audit of special purpose financial statements may require special consideration. So generally you apply all the standards on audit, but while applying some standards in the audit of special purpose financial statements, some special things you have to keep in mind. One is SA 320. That's what they say. For example, in SA 320, judgment about matters that are material to the users of the financial statements are based on consideration of common financial information needs of users as a group. In case of general purpose financial statements, we determine materiality considering information needs of all the users. But however, in the case of an audit of special purpose financial statements, however, those judgments are based on consideration of financial information needs of only intended users. That's what I have told. In case of SA 320, we decide materiality, not considering information needs of all users, only considering information needs of intended users. Next. In the case of special purpose financial statements, such as those prepared in accordance with the requirements of a contract, management may agree with the intended users on a threshold below which the misstatements identified during the audit will not be corrected or otherwise adjusted. The existence of such a threshold does not relieve the auditor from the requirement to determine materiality in accordance with SA 320 for the purpose of planning and performance of the audit of the standalone financial statements. Special purpose financial statements. I want you to do one thing. Read these 2 points once and try to interpret what they are trying to say. I want you to go through these 2 points. Read it once on your own. Try to understand what they are trying to say. I will explain. Don't worry. But I want you to interpret. You apply your reading skills and interpret it. I will explain definitely. Come on, make an honest effort, guys. Don't be lazy. So everything in the question paper, when you sit for the examination, I will not come and explain the question given there. You have to read and interpret it on your own. So that's why develop that reading skill. Read it now. 5th point, 6th point, read it. Try to interpret it, what they're trying to say. I will explain, but wait for my explanation. But before that, you make an honest effort to understand it. Come on, develop that reading skill, everybody. I'll give you 2 minutes of time. 2 points have to be read and understood. Done. Okay. So let me explain that now, what they are trying to say here. So as I always say, examples make the concept easy. Let us take an example to make you understand it. I was telling you that Zomato and Blinkit example. Zomato and Blinkit. Now, for the purpose of acquisition, they have a contract. For the purpose of acquisition, they have a contract. In that contract only, they have decided what is that special purpose framework, what set of rules and regulations they are required to follow. They have mentioned in the contract. In the contract, they both have agreed. Zomato agreed with the Blinkit that, boss, will keep one threshold when you are preparing the financial statements. In your financial statements, if there is any misstatement below 10 lakh rupees, if there is any misstatement below 10 lakh rupees, no need to correct it. We will accept it. So in the contract between the parties, in case if the special purpose framework is defined by the contract, and in the contract, the parties have agreed a threshold, a limit they have agreed, below which they will not correct any misstatements. Even though misstatements is that they agreed that, okay, no need to correct it. These are some miscellaneous misstatements. Even if there is a misstatement below 10 lakh rupees, even if you find it out, we will not correct it. So in the contract only, they have agreed for this threshold. Threshold in the sense limit. Now you tell me, if parties to the contract have agreed to this, that they have set one limit below which they will not correct the misstatements, will this have any impact on determination of materiality? Because of this rule which they have kept in the contract, should the auditor follow any special procedure for defining materiality? No, that will not have any impact on the materiality. No matter whatever kinds of thresholds which are there in the contract between the parties, that will not have any impact on the materiality. Whether they set this limit, they don't set this limit, the auditor will generally determine the materiality as per the requirements of SA 320 only. Why? Because some people will think that, okay, since parties have agreed that they will not correct the misstatements below 10 lakh rupees, auditor need not determine materiality separately. He will take the 10 lakh rupees only as materiality. No, that doesn't apply. Let the parties do whatever they want in the contract. That will not have any impact on the materiality. We will proceed ahead. We will determine our materiality in accordance with SA 320 only. We will not pay attention to whatever the parties have agreed. Clear? So that is what the same thing they try to say here. Pay careful attention in the case of special purpose financial statements, such as those prepared in accordance with the requirements of a contract. Management, pay attention here now. Management may agree with the intended users, like Blinkit is agreeing with Zomato on a threshold. They have set one limit. In our example, 10 lakh rupees is that limit, below which misstatements identified during the audit will not be corrected or adjusted. So in the contract, they have agreed a limit below which misstatements will not be corrected or adjusted. Now this is linking with the next point. The existence of such a threshold does not relieve the auditor from the requirement to determine materiality. So just because the parties have agreed in the contract, that will not reduce the responsibility of the auditor to determine materiality. He still has to determine the materiality as per SA 320 only. Understood now? So this is how you have to interpret it. Next one. Okay, we have seen requirements of 200. We have seen requirements of 320 also. Now let us talk about 260. SA 260 requires the auditor to determine appropriate persons within the entity's governance structure with whom to communicate. Nothing but, as per SA 260, first you have to determine who will fall under that those charged with governance and definition, so that you can communicate with them. SA 260 note that in some cases, all of those charged with governance are involved in managing the entity, and the application of communication requirements need to be modified. In some cases, SA 260 says that management and those charged with governance, both the roles will be played by single person. It happens. Sometimes management and those charged with governance, both the roles will be played by same persons. So in case if the management and those charged with governance, both the roles are played by same category of persons, then you need to make some modifications to your reporting requirements. Not in the audit report, you are required to communicate certain things with those charged with governance. You will do that communication. But in case if the management and those charged with governance, both the roles are played by same person, then whatever communications you are doing with those charged with governance that needs some modification, you do that modifications as well. Okay, next one. When a complete set of general purpose financial statements is also prepared by the entity, that means if your client entity has asked you to conduct audit of special purpose financial statements, but in addition to that, they also have a general purpose financial statements. They have one copy of the financial statements prepared as per Schedule 3 and accounting standards. In addition to that, they prepare the financial statements as per special purpose framework. That also could happen. So when a complete set of general purpose financial statements is also prepared by the entity, those persons responsible for the oversight of the preparation of the special purpose financial statements may not be the same as those charged with governance responsible for preparation of general purpose financial statements. General point which is having no specific reference So what they are trying to say here is, take for example Reliance Industries Limited. For the purpose of their shareholders, for the purpose of their for the purpose of their common users, they have prepared one general purpose financial statements as per Schedule 3 and accounting standards. For the purpose of banker, they have prepared the financial statements on cash basis. Now, if you see here, Reliance has prepared financial statements as per general purpose financial statements also. Reliance has prepared the financial statements as per special purpose financial statements also. And in some cases, what will happen is those people who are involved in the preparation of general purpose financial statements might be different from the people who are involved in the preparation of special purpose financial statements. Those persons who are preparing the general purpose financial statements and those persons who are looking after the preparation of the special purpose financial statements may be different, may be same. Anything could happen. The same thing they try to say here, not that important, nothing specific there here. So these 3 points are more or less talking about SA 260. So what do they say? First, you have to determine who are the appropriate persons in the organization who fall under the definition of those charged with governance. Sometimes what will happen is management and those charged with governance, both the roles are played by the same category of persons. Then you need to make some modifications to your reporting requirements. And in case if the client is preparing general purpose financial statements also in addition to special purpose financial statements, the persons who are preparing the 2 sets of financial statements may be different, may be same. This is what regarding 260. Then finally we have SA 700. Finally, after conducting the audit, you have to form an opinion and report the considerations in such an audit. So how you will report that? As per SA 700. So when forming an opinion and reporting on the special purpose financial statements, the auditor shall apply the requirements devised in SA 700. Understood? Next. Now we will try to cover, the next 3 standards, the next 3 paragraphs in a while. All the 3 collectively will try to complete it. See, take for example, I'm an auditor. I conducted audit of special purpose financial statements. Let me come back to here. So Reliance has prepared financial statements on cash basis. I have given my auditor's report. I have given my auditor's opinion on the financial statements prepared on cash basis. Now you tell me, these are financial statements and this audit report, have they been given for the requirements of all the users or they have been given requirement only for specific user? They have been given the requirement of only specific user, who is banker. Who is what? Banker. So I will prepare the audit report, and this audit report I am giving it on the financial statements which are prepared on cash basis. But this is not for the purpose of every user. This is only for the purpose of requirements of a specific user like banker. But sometimes what will happen is this report might reach to some other person. Apart from the intended user, sometimes the audit report, whatever you have given on the special purpose financial statements, and those special purpose financial statements might reach some other user. For example, some shareholder got access to this. Some shareholder got access to the financial statements and the audit report which I have given, which are prepared on cash basis. Now, can the shareholder come under a wrong interpretation and he might use it for decision making purposes or not? If he use it, is it correct or is it not correct? It is not correct. Why? Because these financial statements, this audit report is prepared only for the intended user who is a banker. This financial statements and this audit report should not form part of decision of any other user apart from intended user. So how as an auditor you can make sure that? How you can make sure that is in the auditor's report, whatever you are giving on the special purpose financial statements, specifically mention what these financial statements are for. For whose purpose these financial statements are prepared, mention that clearly. Sir, how I can mention in my audit report? You can do one thing, you can mention that information in the other matter paragraph, or you can add all together a separate paragraph in your audit report. Either you can explain that information in the other matter paragraph, or even you can use a separate paragraph. In that you can mention, boss, I am doing the audit of these financial statements which are prepared on cash basis. These financial statements are prepared only for the purpose of requirement of the banker. And apart from the banker, this financial statement should not be used by anybody else. So this information you clearly give it in the auditor's report, so that if at all this audit report and financial statements falls in the hands of other than intended users, they will remain cautious and they will not base their decisions on the basis of this audit report and this financial statements. So somewhere you can give a disclosure about this in your auditor's report, either in the other matter paragraph or in some separate paragraph in your auditor's report, you can give this disclosure. And also, to the extent possible, as an auditor, you should take action to restrict the distribution. You can take the action to restrict the distribution of auditor's report and financial statements. You should ask the management, sir, we are preparing this audit report, we are doing this financial statements only for the banker. No, please make sure that you are not giving my audit report, you are not giving this audited financial statements to anybody else. So restrict the distribution of that auditor's report to the extent possible. As an auditor, take some actions, educate the management. This, if you distribute it, if you upload it in the website, or if you just like that post it to the shareholders, their decisions might get misled. So that's why don't distribute this, just give it to the intended users only. Apart from that, don't distribute it to anybody. So even you have to restrict the use or distribution of that auditor's report as well. The same thing they are trying to say here in the coming 3 paragraphs. So if we quickly go through it, SA 700 requires the auditor to evaluate whether the financial statements adequately refer to describe the applicable financial reporting framework. As an auditor, even you should check that in the financial statements also, management has clearly explained what are the requirements that have been followed in the preparation of that financial statements. And in case financial statements prepared in accordance with the provisions of a contract, the auditor shall evaluate whether the financial statements adequately describe any significant interpretation of the contract on which financial statements are based. Nothing but what they simply say here is, in case if you are conducting audit of special purpose financial statements, you should make sure that the management in the financial statements, they have given clear disclosure what accounting requirements they have followed. In case if those requirements are given under a contract, they will clearly specify what are the requirements of the contract. That means whatever applicable financial reporting has been followed, the management should have given a clear disclosure about that applicable financial reporting framework in their financial statements. Whether they have given it or not, as an auditor, I have to check. And SA 700 deals with the form and content of the auditor's report. In case of an auditor's report on the special purpose financial statements, now they are talking about auditor's responsibilities. The auditor's report shall also describe the purpose. In your audit report, you have to clearly say what is the purpose for which these financial statements are prepared. And if necessary, tell who are the intended users. Like if I am preparing an audit report on the financial statements prepared on cash basis for the purpose of the banker, I will say in my audit report, these financial statements are prepared for the purpose of getting loan, and these financial statements are intended to be used only by the banker, not by anybody else. That you have to clearly describe in your auditor's report. So the auditor's report should clearly describe for what purpose these financial statements are prepared and who are the intended users, that you have to clearly mention. If management has a choice of financial reporting frameworks in the preparation of such financial statements, the explanation of management responsibility for the financial statements shall also make reference to its responsibility for determining that the applicable financial reporting framework is acceptable. Sometimes what will happen is, in the contract also, they have given 2 options. Take for example, once again I will give you example. See, I'm giving you so many examples so that all these examples will be able to strike to you in your examination. So between Zomato and Blinkit, they have one contract. Okay, so in that contract, Zomato has given 2 options to choose. They have given option 1 in the preparation of financial statements. Either they can follow option 1 rules and regulations. They have given other option also, option 2 rules and regulations. Now the Blinkit can follow either the rules and regulations as per option 1, or they have given some rules and regulations as per option 2. That means here the company is having option to choose between the reporting framework. Both are special purpose framework only, but the client is having an option here. Either they can follow special purpose framework number 1, and either they can follow special purpose framework number 2. Now it is completely whose choice? Management of this company's choice. If the management has chosen special purpose framework 1, they will follow. Now in the auditor's responsibility, in the audit report, in the management responsibility paragraph, you have to tell that fact. Here the management has been given 2 options. Which one is suitable for them? The responsibility for choosing what is acceptable for them rests with the management only. That means as an auditor, we did not interfere in choosing which framework management has to follow. That is completely management responsibility. Management, they have decided, it is their responsibility to decide which option they have to choose, which one will be acceptable. That choosing is the responsibility of the management. We did not interfere in that. This where you have to tell in the audit report, you will give the management responsibility paragraph. No, in that management responsibility paragraph, you have to add this line. You will give a list of all the responsibilities. Along with that, you will also add one line that it is the management responsibility to choose which special purpose framework will be acceptable for them. We did not interfere in that. So that's what they say here. If you start reading it, if a management is having a choice of financial reporting framework in the preparation of such financial statements, the explanation of management responsibility for the financial statements, that means in the management responsibility paragraph, should also make a reference. As an auditor, you should make a reference that the responsibility for determining that applicable financial reporting framework is acceptable in the circumstances is there on the management. The responsibility for choosing which option will be acceptable rests with the management. We are not having any such responsibility. You have to say that. So like this, you have to add some description about the applicable financial reporting framework in either in financial statements also, in your auditor's report also. Next, E point is also repeated point, alerting the readers that the financial statements are prepared in accordance with a special purpose framework. Same points they say here. The special purpose financial statements may be used for the purposes other than for which they are intended. Sometimes the financial statements and audit report might fall in the hands of other than intended users, and they might use it for their decision making purposes, which is not appropriate. So that's why what you should do is, to avoid misunderstanding, the auditor alerts the users of the auditor's report that the financial statements are prepared in accordance with the special purpose framework and therefore may not be suitable for another purposes. So that's why you have to clearly mention the auditor's report that this audit report and financial statements are prepared for some specific purpose. You should not use it. That you have to mention. More or less the same thing you have seen in the previous paragraph also. Next one. To the extent possible, you have to restrict on the distribution or usage also. So you should take proper actions to make sure that management is not distributing like any other general purpose financial statements. You should try to restrict that distribution of the special purpose financial statements also. In addition to the alert required as discussed above, the auditor may consider it appropriate to indicate that auditor's report is intended solely for the specific users. So we have to mention, once again, repeated point, you have to indicate in the auditor's report it is mentioned only for specific purpose. Depending on the law or regulation applicable, this may be achieved by restricting distribution or use of the auditor's report. How you can make sure that this audit report does not fall in the wrong hands? By making sure that the distribution of such audit report is restricted. It is given only to intended users. It is not getting distributed in a vague manner. In these circumstances, the paragraph alerting the readers may be expanded to include those other matters and the heading modified accordingly. So similarly, what you can do is, you can expand the paragraph, whatever paragraph you are adding. As I have told, either you can highlight that information in the other matter paragraph, or either you can use altogether a separate paragraph. If you are using separate paragraph, update the heading. You can say restriction on usage, or restriction on distribution of usage. So add that paragraph with the heading and say that clearly in that other matter paragraph. Once again, repeated point, to the extent possible, you have to restrict the usage and highlight this information in the auditor's report. Clear, everybody? So where it will be reported in the other matter paragraph, or altogether a separate paragraph. So let me see whether any examples I can give it to you from this. So just let me check whether any audit report we can get it regarding the special purpose framework. Just give me a minute. Yes, see here, this is the audit report on special purpose financial statements. So this is actually from Bank of Baroda. On Bank of Baroda, they have done audit of the special purpose financial statements. On that, some chartered accountants, Singhvi and Sancheti. So these auditors are giving a audit report on special purpose financial statements for consolidation purposes. So whatever may be special purpose financial statements are there, for that purpose, they are giving this audit report. So if you could see here, they have told about their responsibilities. They have given the management responsibility. Yes or no? So they have given management responsibility. They have given auditor's responsibility. And even if you see here, opinion they have given. Along with the opinion, see here, they are using a separate paragraph. As I have told, they have to make separate use of the paragraph, or they can include it in the other matter paragraph. So in fact, in this, the auditors have chosen to use a separate paragraph, restriction on use and distribution. So let us see what they're trying to say here in this paragraph. The special purpose financial information has been prepared only for the purpose of providing information to BOB to enable it to prepare the consolidated financial statements. Nothing but in this paragraph, they have told the purpose, who are the intended users, they have told. As a result, the said special purpose financial information is not a complete set of financial statements of the company or component, and it is not intended to give a true or fair view in all material aspects. Then blah blah blah. Let us come to the main point. The financial information may therefore not be suitable for any other purpose. Apart from consolidation, these financial statements are not suitable for any other purpose. This report is provided to solely for the information of use of Bank of Baroda to assist you in your audit of the consolidated financial statements. This report may also be relied upon by statutory central auditors of the Bank of Baroda, and it should not be distributed. See this line. It should not be distributed to anyone in the group, any of its components, or any other third party. So like this, in order to avoid the other than intended users from using it, you can take these kind of actions. That's what has been given even in this paragraph also. Able to understand? So this is what regarding your reporting requirements. Hope you guys are able to understand the standard in a practical manner, and also this is a very interesting standard. So what we have covered in the standard, first we understood what is the meaning of the special purpose framework. Then we understood what considerations you have to keep in mind while accepting such engagements. Then we have seen what considerations you have to keep in mind when planning and performing such audit. Then we also have seen how you have to, what are your reporting requirements specifically, like description about applicable financial reporting framework. You have to alert the readers of the financial statements and audit report, and even you have to restrict on distribution of usage of that report. Clear? So this is what we have to keep in mind while reading SA 800. Hope you guys have enjoyed this standard. See you again in the next class with one more standard. Bye everybody, take care.